What's going on, guys? It's Kyle. This is Big Money Mindset. Pleased to bring you another video here today. And in today's video, we're going to be going over Hyliion Stock, SHLL. In specific, I'm going to be going over how to invest in options trading for massive opportunity to profit in the near future. And I want to make sure you guys realize we do like to limit our risk when investing in options. And I'm going to be showing you how to be cautious and what to look for when you are investing in these options plays. And I want to say thank you to everyone that's subscribed to the channel so far. It really means a lot to me, and all the feedback you guys have been giving me is extremely appreciated. Most importantly, don't forget to subscribe to the channel if you feel this video gives you great insight on how to invest in stock options with Hyliion strategically while limiting your risk at the same time. You don't want to miss out. There's going to be a lot of great content coming in the near future. All right, let's get into it. Before we get into the video, I just want to go over the portfolio real quickly. So this is just my growth portfolio that I showed all of you guys. We invested about $16,700, market value of $21,600, close to a $5,000 profit, a 29% gain. So I do hold my Hyliion shares in here that I won't be touching. I'm going to hold these for the long term, okay? I got 143 shares, $21.45, cost around $3 grand. And guys, I see these shares, heading a lot higher in the near future. So we're not going to touch these. But I do hold my option stocks in my Robinhood portfolio. We're going to be going over those options plays and why I chose them specifically as we get further on in the video. Alright guys, I want you to understand that options trading is high risk, high rewards, okay? It is extremely risky as far as unlimited profits are available if you do know how to pick options plays accordingly. Never invest more than you are willing to lose in options trading, okay? You can lose all of your money in a very short period of time. This is different from holding an actual stock because an actual stock you can hold forever. It's up to you. You don't lose the stock until you sell. The thing about options trading is there's massive benefits to options trading, okay? The profits are limitless. If you know how to hit it correctly and time the market on a specific stock, you might just consider yourself Houdini because you're reading the future. Options can be defined as contracts that give a buyer the right to buy or sell the underlying asset or the security on which a derivative contract is based by a set expiration date at a specific price. So guys, that's the two main things we're going to be understanding in these options trading videos. Expiration date at a specific price. That is the main basis of an options play. You are predicting a specific price going up or down on an expiration date before an expiration date expires. We're going to be going over two types of options trading. A call option is bought if the trader expects the price of the underlying to rise within a certain time frame. This is the bull thesis, guys. We're going up, predicting the stock to go upwards. And the second is a put option, which is bought if the trader expects the price of the underlying to fall within a certain time frame. The bear, downwards. As we are getting closer and closer to the merger of Hyliion and SHLL, tortoise acquisition, we're going to take a quick look into the charts so we can understand what is going on in this specific time frame. This is going to give us a grasp on what we're going to be doing when we purchase our options. So we understand that when the merger was announced that the stock price did hit around $33, and there's just been a slight drop off, a pretty slow and steady drop off for the past couple of weeks, where we hit a base price of $17.90, I believe, right around that range. Okay, we hit into the 17s, and we have just been steadily increasing very slowly over the past 2 weeks, and now we are seeing, as we are within 3.5 weeks to the merger, there is a slight increase in the stock price. And the last month, we have had a 33% increase from the $18 bottom, guys. So what does that mean? We are understanding that institutional investors are gradually beginning to put their foot in the door to try and get some stock at a low price, but it is gradually increasing the price steadily, as we can see over these past couple of weeks. So people are getting more aggressive leading up to the merger. We're going to be taking a look into the SHLL options trading stocks that are available. In my perspective, I have a bull thesis on SHLL during this merger, of course. A lot of people have their perspective pricing, and I expect this stock pricing to hit anywhere in the 60s to 90s within a matter of days. So guys, that would give me an extreme bull thesis, because of the mass intensity of this hype merger. So guys, I will be playing the call option because I believe the price will increase dramatically in a short period of time. So what we want to take a look into is expiration dates, guys. As we begin to get closer to your call option, your option is going to be hitting this thing called an expiration date, which gradually decreases what the option is worth. Even at your profitable price point, it can dramatically decrease significantly in a short period of time. So you want to play options a little bit further out so you limit the risk of price movements not occurring at the times that you want them to happen. It gives you more leverage as far as a stock moving the way you want it to move. As we begin to increase the time frame of the expiration date, this is going to dramatically increase the price points of what we purchase these contracts for, because at an expiration date at a longer time, it's going to give you a more chance to profit in the near future by limiting your risk. So they do increase the prices as far as expiration dates get extended. So understand that you're going to pay a higher premium for an extended time frame. So if we look at the first three call options, we have September 18th, October 16th, and January 15th. So we understand that the merger could potentially happen around September 25th. So that is going to be playing it very slim if we go with the September 18th call option, even though those price points are going to be at a solid price. So October 16th would put us a couple weeks out from the merger date, giving us more of a cushion. I feel January 15th, 2021 is a bit too far-fetched because we're not really worried that time frame when we play in a quick swing trade as far as a Hyliion, which is going to be having massive exposure on this merger as far as a significant amount of institutional investors. The October 16th call options, they are giving you a strike price to purchase a specific contract worth 100 contracts at a premium. As you can see, the lower the strike price, the more you're going to pay for the premium. As you begin to get more riskier, increasing your break-even price, as you can see, the percentage is much larger when you expect the price to go to $40 rather than $30. You're gonna pay less because you're putting your targeted price point at a higher expected average. So just remember, the lower the strike price, the higher premium you will pay because your opportunity to profit will be greater, offering you a lower return in the end. If you go with a higher strike price, you will pay a lower premium, giving you the opportunity to profit a little bit further if the stock price does raise significantly. As you can see, I did purchase a call option at a $40 strike price with 16 contracts. What you need to understand is I did purchase these a couple of days ago in the previous week, and the premium price has risen. I got these for a premium of $3.90 per 100 shares. Each contract is worth 100 shares at a premium price. It's just the limit they put these contracts at 100 because, the price points on these premiums are so low. As the stock rises, all of the premiums will go up. It doesn't matter the strike price because when the stock rises, your opportunity to profit becomes greater. So they have to increase the premium because you have a bigger opportunity to profit. As the stock drops lower, you will see these premiums decrease in price points because your risk is going to become greater. Alright guys, now we're going to be looking into the options play that I went with. You already know my strike price is around $40, okay? So I got 1,600 contracts at a premium price for $3.90. This was a total cost value of $6,240, okay? It was a good amount to make an aggressive profit if the stock price does go to where I want in the near future. And I will also be going into a profit options calculator where we can be reviewing the potential opportunity on this investment play. As you can see, in just a matter of days, I have had drastic decreases and increases. When the stock goes up and down, these options do move very aggressively. So I remember the first day I actually purchased these options, the stock did decrease close to 4%. I was down about $1,000, and these premiums were going around $3.30. Guys, I'm not gonna lie, I was pretty upset that I, purchased and lost a 60-cent premium in a matter of hours. So that does happen, and as you can see, it has risen over, near another dollar. Now that we're entering this new week and the stock is moving up significantly again. So just understand, these premiums are going to change as far as the stock price changes, but the stock does seem like it is gaining very strong leverage for the bull rush when this merger happens. So understand, we might not see the $20 range very soon ever again. This is a beautiful tool you need to use when it comes to playing options, okay? This is an options profit calculator. It can calculate the exact amount of profits you are going to make as far as your expiration date on your contract. So what we're going to be doing is we're going to be going into the basic long call bullish options calculator, okay? So we're going to be looking into the options calculator dates and time frames, and we're going to be going to the one I purchased, which was the October 16th call options, where I had a $40 strike price. As you can see, these are rising very quickly, guys. Just understand that they are getting more expensive as Shell begins to rise. So even though it says average price point of $475, I did get these at a slight premium of $390, even though they did go on sale even further at $320. So I had approximately 16 contracts, okay? That gave me a value of $6,240 on this call option, okay? You can put a graph range of what you expect the option to hit in the near future. So we're going to be going with $50 to $90 because this is the types of price points I expect to happen when this merger does finalize. And I do expect Hyliion Shell to be at a base price when this is all over and everything's said and done around $60. So the risk is very limited at these price points because we can see Hyliion is gradually moving up steadily as the merger begins to increase. And there's going to be a lot of long-term players, guys, holding this stock, such as myself and my growth portfolio. I will be holding this stock in shares, but I'm going to play the swing trade because we're going to be looking at tons of investors leading up to this merger, guys. The price points that this could hit is insane. With the options play that I did invest in, guys, at $3.90 on this expiration date of October 15th, this gave us about 1,600 premiums. And as we can see, if we put our price point targets at $50 to a $90 range, the opportunity to profit does increase significantly once we get over that $50 range, okay? We would see a $6,000 to $20,000 profit at the $50 mark. As we go up to the $75 mark, our $6,000 could potentially turn into a $53,000 profit. And of course, a crazy bull thesis that I've been going over for the past couple of weeks. If we get into that $90 range, our $6,000 investment could be worth nearly 75 grand if we time this accordingly and hit it perfectly. So guys, you can go through the Shell options, and put in these price points and the amount of contracts you are planning on to purchase. And this will give you a very accurate estimate of the potential gains you can experience if you do pick your options accordingly in a timely manner with a great expiration date. So I just wanted you guys to understand the power of options. When you get into that, couple $1,000 range, it can get very serious very quickly. And I want to be as transparent as possible with you guys. I'm revealing my portfolio to you guys. I'm revealing my options calls I'm doing. I just want you guys to understand I'm not here to give you guys bad advice. I want you guys to get the best advice as possible as far as making the right investment opportunities to grow your wealth over time. Guys, I know these stocks are a bit aggressive, these speculation plays, but I am not pushing penny stocks down this channel that have the potential to lose people's investments in a matter of minutes, guys. That penny stock stuff is extremely serious, and these speculative plays with growth opportunities are a far better investment as far as stability and growth over time. So I am not a professional options trader. I do not day trade options calls, put options. I don't mess with penny stocks. I like to limit my risk by increasing the expiration date when I know potential news can break out a stock as far as a massive merger that has been building up for 3 months, guys. This limits my risk and grows the chances of opportunity to profit. You got to understand, all my options call, guys, I do have a break-even price at $43. So if I hit around that $43 price point, I will still get all my money back. I do feel like SHLL is going to be worth significantly more than $43 after this merger. So I feel like my risks are very limited. And I want to say thank you if you made it to the end of the video. It really does mean a lot to me. I want to make sure you guys get a great insight on how these options plays work. And of course, I want to be transparent with you guys and make sure you guys make the best decisions and limit your risk. I just want to see everyone succeed and grow their financial wealth over time. And I really hope this video helps you to make the best decision possible to make massive opportunity profits on Hyliion SHLL in the near future when this merger happens. And if this video did give you great insight on options trading and perspective on how to play them, be sure to subscribe to the channel. We're going to be going over a lot of content in the near future as far as options plays, growth stocks, and spec plays. You don't want to miss out. This is Big Money Mindset. I'm Kyle. You have a great day.